Good afternoon, everyone. Morning for some, evening for others all over the world. Welcome to today's call. Picture of the week here, photo of the week is one of my granddaughters taking on the entire ocean. Kind of feels like what we do as traders sometimes when things aren't quite going right. Nonetheless, I have just a ton of information to cover today, and I'm just going to go ahead and apologize up front because I'm going to be all over the board. There, there are just a ton of different things that can be done, including a preview of something that eventually will be commonplace in the future that we will be talking about today. So, before I get into the all of the material today, a couple of quick announcements. First of all, if you haven't heard already, we are going to be able to sell trade partner stock. So users can now become owners of trade partner. Not yet, but by the end of January, that will become a reality. Anybody can buy any amount of shares that they want, doesn't matter. And that gives you an opportunity to actually have an ownership stake in trade partner. I think it's pretty cool to have the users as part owners in that. So a lot more information coming out on that in the future. And then next Thursday, so right before this call, next Thursday, we will be doing a profit stacking risk-free calendar spreads. If you are a part of the TPO seminar, if you bought the TPO seminar, either the live or the recording, or if you're a part of the Smart Trading All Access Pass, you'll automatically have access to that. If you are simply a monthly subscriber to these calls, you will need to purchase this in order to attend. So that's up to you on whether you think that you've gotten enough information from these calls about profit stacking risk-free calendar spreads, which we will begin a little bit. We'll talk a little bit about today as well. But that's something that you can decide is worth it. It's only 97 bucks. So, all right. Those are the announcements. For those who are new on the call, welcome. I do want to welcome you, but I also want to warn you that I don't explain everything about these trades on the call, nor can I. There's a reason we do these calls twice a week, and you're going to find today is just going to be. I'm just going to I'm just going to throw all this information at you. And so it might be a little confusing. My suggestion is that you go back and listen to some recordings before you actually try to implement some of these trades. I also want to warn you that these trades are fantastic. There's some fantastic trades, but they're not the holy grail. And there can mistakes can be made, and they can be costly if you don't know what you're doing. So you need to start small, and you need to make sure that you follow the instructions and you're not reckless with how you put these together. A lot of traders get greedy and they try and go big right at the beginning, make mistakes, don't realize that they didn't understand quite everything about it, et cetera, et cetera. And then they turn around and go start trading small anyway after they made the mistake. So you don't need to do that. And the reason you don't need to do that is because the compounding will grow your account plenty fast. Once you start to consistently make a little bit of money on a weekly basis, that compounding can grow a small account into $30,000 literally within about 6 months. Maybe a little bit less, maybe a little bit longer, depending on different variables. But it's going to be close if you can average just $100 a week. Now, if you can't average $100 a week, it's going to be slower, but still after 5 years, you're talking about significant growth. If you can average $100 a week for 5 years, you're talking about growing your account to over $3 million. If you can average just $50 a week, you're talking about growing your account to over $1 million after 5 years. And if you can only average $20 a week, which is very easy if you just keep it simple with this approach, high probability, keep it simple, you can average $20 a week. And if there's anybody on here, I want to just take a second here. If there's anybody on here that has been on these calls for several months and you're not making money yet, my suggestion is to go with the highest probability trade with a credit and start there. Don't try and do everything. And I know some of you are trying to do everything. And trust me, I do everything, and it is super, super difficult to do everything and keep track of it all. So the reason I give all this information is so that you can find your niche. There are plenty of opportunities. You need to become good at one of them or two of them. And then you'll find that success will become much more consistent, and you can go from there. So now let's get into, I told you I'm going to cover a bunch of stuff. I'm going to start with the option insanity today, because this generated some interest a couple of months back when I first introduced the 5-to-1 ratio trade. And so basically right now you can't really get anything that's close on the 5-to-1. And so I actually have this position on. We were in a position last week that was I believe it was a 5-to-1 on 12-7, or not 12-7, 12-4, 12-7. Ended up taking about a $300 profit on that one, and it was somewhere around 373 was where the shorts were, if my memory serves me correctly. So started looking for some more. There really weren't any. I mean, I could have gone 1224, 1228 on a couple, and you can actually, and I actually did a 1224, 1228 different version, which I will get to here in a second. But this is one that I want to say I took on Monday. Maybe it was Tuesday. I don't remember now what day I took it, but I legged into it. So I actually sold the 582, excuse me. I sold the 5383 calls first, and then I bought my long. And the reason is because I had a credit in there at, there was a bid-ask spread. And when you're talking about 6 options, you're talking about a pretty big ask spread. And I didn't say, I said bid ask, not, yeah. So anyway, and I wasn't getting a 90-cent credit with one order. So I'm like, no way. I'm just going to go ahead and sell the 383s, and then I'll buy the 373 on a small, at a slightly better price. And so that was filled. And so my total credit was 93 cents on this trade. And you can see here, the break even is long about 384, but the caveat with this thing is that it is way out there. This is not one that you're necessarily going to be able to get a credit on, and this is way out of the money. We're trading, less than 360, or at least we were trading well under 368 before the call. Closer to 367 right before the call. So we're talking about the 373 is 6 points away, and that's the beginning of the short. That's the beginning of the profit zone. And then the break-even point is at about 385 on this trade, maybe just slightly less than 385. So this is something that it just has a huge probability of success. 385 is not impossible. It's almost 20 points out of the money. It's not impossible for the market to go to 385 by then, but the thing is that if this takes any time whatsoever to get up to 374, 375, let's say it does it by the end of next week. If it does it by the end of next week, we're probably going to be looking at a pretty decent profit in this trade already. And in fact, I'm already making money on the trade. It's right before the call, it was trading at a credit of, I believe, 40 or 30 cents. So already making $60 on the trade. There's no reason to get out of it. Again, the other caveat is that this thing there's a lot of risk with this. This is not something that you can do in a small, $2,000 account. It's more like the account has to be minimum like $10,000 with your margin hedge. And so that is something that is for a little bit bigger accounts. If you have a smaller account, and this is going to be about the smallest you can be able to do it is probably about $3,000 to $5,000, but you don't want to do that. You don't want to do these trades if you only have $3,000. It's going to cost about it's going to be about $3,000 to $4,000 in margin to do this particular trade. And this is one that I did yesterday, and it's just a 2-to-1 option insanity trade. And this is a 1224, 1228 expiration. And the credit on this was 30 cents. It's a lot closer to the money, but it's also closer in time. We're talking 2 weeks out as opposed to 1 week out. And again, if the market takes any amount of time, if the market takes any amount of time to get into this level, the 370, 371, 372, 373 area, which I expect that it will do, maybe not next week, but starting the week after, or maybe towards the end of next week, I should say, we pick up another bullish seasonal. And this thing, again, is going to be showing a pretty decent profit by the time it starts going through this profit zone. And so you'll have plenty of time to get out. Obviously, the caveat on this one is that it is closer to the money. And if the market jumps up 374, 375 tomorrow or Monday or Tuesday, then that it's not going to be showing a profit. Right. So this one has a little bit more risk, a little bit lower probability associated with it as well, but it is something that is available, and I'll take a look at that here in a second with what I would actually do with this particular trade. Okay. Then I talked about on Monday this weird looking trade that I took. And I took this trade when the market was trading, I guess around 369-ish. And the purpose of this trade, and you'll notice if you count the shorts and the longs, there are 3 shorts and 4 longs. And I don't do this often, especially in current market conditions, which basically current market conditions is such that if the market moves up, the Monday options are going to lose just a tremendous amount of value as of Friday, the Friday prior to Monday. So there's this huge dead zone here, and it was probably actually a little bit bigger than what this was showing. But the whole purpose of this was to sell more premium if the market moved up. I was not going to hold on to this extra long without selling more premium. And so I was hoping the market would move up a little bit. The best case scenario would have been the market to move up to about 373, 374, and then back down. And that would have been the best scenario. And I was willing to do this week. Why? People ask, do I take into consideration market timing? And the answer is maybe. Sometimes I play the reversion to the means. Generally, I like playing the really high probability trades where the profit zone is way out of the money, and then the market comes in, or we have a credit on the trade, and so if the market goes down, I still have some money. Those are my favorite because of the high probability of success. But the calendars these days are not getting to where they're worth a whole heck of a lot, even going into the last day because of that phenomenon, and especially this week. Going to see the calendars they're just not going to be worth a whole lot. So you can't, if you paid too much for the calendars, you're going to be in trouble. And that's why I say, you got to be really careful with the calendars when you're talking about current market conditions. But one of the reasons that I was played this in this fashion was because the market has a very, very, very bullish seasonal the first week. Excuse me, goodness. Has a hang on. Goodness, I got a little too ahead of myself there. The first week of December, very, very bullish. I told you guys this before. Going into the last, actually on November 30th, I said, as of today's close, it begins the bullish, the most bullish week, not the next opening, but today's close, and that was on the 30th. That was Monday, and of course, that's what happened. It didn't have to happen, but it's been 100% since SPY started, and you don't have that kind of stuff. I mean, it just doesn't. It's not out there. So there's something to it. There was something to it. There is. And then usually after the first week's move, then you have this, and my screen just, there it goes. After the first week's move, you have this lull in the seasonal. And so I was actually willing to play this lull first and foremost, but if the market continued moving up, I'd want to sell more premium. So that's why I did that. The market came down yesterday. Ended up having $100 profit total open on the trade, and I went ahead and just took the $100 profit because there's no way if the market shot up that I was going to be able to sell premium. If the market shot up today, I was not going to be able to sell that much premium because there's only one day left, right? So no reason to hold on to this, and I went ahead and did that. And I also mentioned that I could have bought a bunch of calendars on this trade. I think I was looking at the 373s, and I could have bought 4 or 5 calendars on this trade, and I was not willing to do that because A, of the seasonal, and B, because the calendars were kind of expensive, given the fact that they were 3-4 points out of the money, and there just wasn't a huge amount of profit potential on them. So I felt I could do better by playing it this way. So that's what I did. And went ahead and took $100 profit. This is a tough week for a couple of reasons. Next week is going to be tough. The following week's going to be tough, and the following week after that's going to be tough. So that's why I started introducing some new ideas, because this is a great time to start looking at some different things when the best of what we normally do really is kind of just all screwed up right now because of next week's ex-dividend. The following week after that is Christmas. The following week after that is New Year's. And so we have to deal with a bunch of market irregularities going on. So that was that trade. And so on Monday, I mentioned the idea of, okay, because of all these irregularities, let's take a look at something different. Use the opportunity, take a look at something different in being able to take advantage of these things a little bit different way. And so I introduced and said, okay, let's sell the shorts a week out from the longs. Instead of selling Friday and buying Monday, let's sell Monday and buy the following Monday. And so I put together a couple of different spreads for that. The first one is this is 373, 378 diagonal combined with just two calendars. And you'll notice the calendars a little bit more expensive because you've got more time in between there, but nonetheless something that was available. 21 cent credit. So if the market tanked, we're going to make money. Eventually, if the market were to really skyrocket, and this is 1221, this is by 1221, if the market were to really skyrocket, and this would be a week and a day. A week and a day is when this would expire, a week and a day from now. Um, then we might be losing some money, and you have to be willing to accept that risk. So with this, the thing is that if the market moves up to, let's say, 373 on 1221, guess what? We can sell the 1223 373s. So that one, we get out of that one, turn around, sell the 323s, turn around, sell the 1223 373s, and then turn around and try and bring in something on the 1221, or excuse me, the 1223 379s. At that point, we may or may not be able to bring something in on those 379s with only 2 days left. So this is something I said we would watch, and we will continue to watch that. This is actually trading at a debit now, a small debit. So this is making a little bit more than $21 on the trade. Where is that? I had another one. Let me see if I can find it. Did I put that one in here? I believe I did. Yep, here it is. All right, so I'm just going to move these real quick. All right. So here is another trade, very, very similar. And I spread it out this way so you could see what I was doing. Is a 373s, 378, but instead of 379 calendars, I did two 378 calendars. And truth is that this is just a 3-1-1 trade is all this is, right? Because I have short 373, short two 378s, and then long three 378s. But I spread it out because that's the same type of trade as I talked about here. So you got 379s, right? And the only difference is I had 378s on this trade, and it was going, as you can see here, for 53 cents. I actually got filled at 54 cents on this entire trade, and that was on Monday. And this is, I believe this was on Monday. I believe I was filled on this on Monday. Don't recall exactly. Nonetheless, this trade right now is at debit of 53 cents. So sold it, and you can see here it's a 1-2-3 trade. It's short a 373. I put in the wrong, so that's not where that's at. I'm gonna have to take a look at that. That should be 378, not 377s. So that one is a little bit different. I'll have to take a look at that. All right, moving on. So we will watch these, by the way, because this is 1-6-1-11. So we went way out there, not because of anything other than wanted plenty of time to watch this thing. And so when we get to the 1-6 day, the 1-6, January 6th, we'll take a look at that, and we'll, depending on where we are, we might be able to get rid of the 1-6s and resell the 1-8s on here. So bring in more credit. It's called the cash flow approach. That's where I sell multiple shorts against one single long. That's my cash flow approach. All right, let's talk a little bit about crazy calendars for Christmas. So this is what I did today. So we still have crazy calendars are still available. The calendar spreads are fairly cheap, going all the way out to Christmas, but we've got 2 weeks on it. And so I'm still willing to do these, but again, you just have to be careful that you don't pay too much for these calendars because they're not going to produce a huge amount of profit at the 376 level. Based on current volatility and the current drop in volatility, I expect that these calendars, which are 22 cents, I expect them to be worth somewhere around 40 or 50 cents, and that's it the day before. And so this is something where, I got 5 of them, and I might have a $150 profit on those. I'll be losing a little bit of money on this 374 if the market's trading right at 376. So the day before, if I can pull out with a $100 profit, then I will do that. I don't think we're going to get all the way to 376 at this point before Christmas. I could be wrong because there is another bullish seasonal that is going to come into play next week, starting, I would say, about mid next week going into the following week. It's not as strong as the one we just came out of, but it is there nonetheless, and plus we got all the other junk that's going on. All right, so I put in this order this morning. The way I put it in was sell the 374, and of course this is my favorite way to do this, and it's not available for everyone. And if you have too small of an account, you'll have to limit the risk a different way. But on this one, the market hedge, or excuse me, the margin hedge, the overall risk on this technically is about $2,500 because my margin hedge was, I think it was a 398. And so that just limits the risk. Of course, the market's not going to 398 between now and Christmas, but you have to assume the absolute worst and be willing to take that risk just in case. There's always something crazy that can come in that no one ever saw coming. But it's not going to happen often, right? Nonetheless, this particular one, I got filled on my 130, and so it then went ahead and placed the order for the 376s, and those 376s were at 22. Now, when this got filled this morning, the market was trading around 370, or excuse me, 367.50-ish. So the market had come up off the lows, trading at 367.50. So I get filled on the 130. These were trading at about 22 cents, but they didn't get filled, and the market came down to about 367. They definitely should have been filled. They weren't filled. Market came down to 366.75, and they still weren't filled. And I'm like, this is nuts. There's no reason why this should not be filled. And so I'm like, you know what? I'm not even going to do this. So I canceled the calendars, because as you can see, it was trading at 22 cents. Market's at 366.74 now. I'm making 15 cents on my short. Right, and I still can't get filled on these dumb calendars, which were trading at 322 at 22 cents when the market was at 367.50. So I'm like, okay, they're just they're messing around with me, and I'm just not gonna play the game. And so what I did is I canceled those, and I just simply bought a single 376 call for 52 cents. That's all I did, because that one was trading much lower than the 376 than it was when the 374 was called. So, sometimes you'll run into a situation like that where you should definitely be filled. It's not getting filled, and so you can do something else. Now, I didn't plan it this way. I fully expected it to be filled. But you can plan them this way. If you're not filled by a certain amount of time, let's if the market is down, to whatever, you can put that in Trade Partner. And you can say if the market moves down to X and this isn't filled, cancel it and place this other order. And in fact, that wouldn't be a bad thing to do in the future on a consistent basis as an alternative. Because as soon as I did that, I basically created a 78-cent credit on the trade, total 78-cent credit on the trade. I have a profit peak of around 374. The break even is going to be around 376, 377, and my max risk on the trade now is less than $1.25. I don't even know that I'll do anything else with this trade because if the market moves up to around 374-ish by Christmas, I should have a pretty decent profit in place. So sometimes things just don't work out the way you want, and you can improvise, and that's one aspect to that. I was not willing to not do something because there is a bullish seasonal that will start to come into play next week, and if it comes in early, if it starts tomorrow, a short 374 with nothing on the back end, yeah, it's a good trade, but it's not a great trade, right? So I was not willing to not do anything. All right, so that brings us into the next thing. So this is available, by the way. You can do, you can go out a little bit further away and do the 1224, 1228s. You can still do the calendars. You just got to make sure you don't pay too much for those things because they're not going to be worth a lot of money. 2 points on either side, and you're going to be breaking even if you pay 22 to 25 cents on these things. That's just where it's at right now. And we'll take a look at the calendars that exist right now, and you'll see what I'm talking about. All right. Furthermore, well, no, I'm not going to get to that point yet. Okay, so introducing one more thing before we start looking at some actual trades that are available, and we'll take a look at multiple different ideas here as well. So the first thing is a unique opportunity with regard to risk-free calendars. So I want you to take a look at something here. We have Christmas coming. It just so happens that Christmas is on a Friday. That makes Christmas Eve on a Thursday. That means that the Friday options that would normally expire on Friday are actually now going to expire on Thursday, which means that we have Wednesday expiration options and Thursday expiration options. And I want you to look at the difference in price between the two right now. Okay, this was right before the call. Market's trading at 366.82. And you can see here that the 1223 calendars were trading at 67 cents and the 1224 calendars were trading at 72 cents. So that's a 5-cent difference. Now, if you're thinking to yourself, oh, wow, those are some really cheap calendars. They are. That's some really cheap calendars, but you got to understand that that's one day, and on Christmas Eve, they're going to shut the markets down early, and there's not going to be a lot of volume, and there's not a lot of profit potential in those calendars. That's just the way it is. So you do have to be careful, but what it does do is it brings in an interesting scenario for you to be able to much more quickly put on risk-free calendars. So I sold the 376s, 1223, and then I put an order to buy the 1224 376s for the same price. And I was filled within about, I would want to say about 7 minutes between the two. So the probability of me getting filled on these at a better price or at the same price was very, very high because There's a lot of time left in the day, and it didn't look like the market was going to make a huge move one way or the other. So as long as it didn't just immediately pop up, I would have time working for me, because the market's at the strike is at 376, right? And so huge probability of being able to get filled on this at the same price, and of course I did. And this is just one of a series. I'm stacking these. So the thing though is that there's not a lot of profit available in this. The draw is that it is risk free. The draw is that if I can stack enough of these together, then at some point I can sell a diagonal. If the market begins to move up, I can sell a diagonal spread, a really close in diagonal spread, and potentially make a significant amount of money on these. All right, so let me pull in. Let's start looking at a couple of things. Where in the world did that window go? I think, is that it? I had the window ready and it disappeared on me, and there it is. And oh no. So for you who have been, this is going to be frustrating. So I know you guys have been waiting for the spread patterns to come out. And we keep having a problem that they haven't seemed to fix yet. And that is when I have a spread pattern in place for a period. Oh, there it is. Wow, it came up after all. When I have a spread pattern in place for a period of time, it often causes trade partners shut down. And so we just have not been able to release the new spread pattern generator to everyone yet. They're working on it, and as soon as they get that fixed, it'll be good enough to put out there as beta, and y'all can play with it all you want. All right, so let's take a look at excuse me, the 2-to-1 option insanity opportunities that exist right now for 12/31 and 1/4. And I'm going to do the 2-to-1s. All right, so we're doing 2-to-1s. And so we're selling the 1/4s and buying the 12/31s, selling 2 and buying 1. So this is like your net short 1. And it's being net short 1, but let me see if I can pull it up here. Here it is. You have this big profit potential that is in the middle of the profit zone. All right, so this is a 372, 377. And right before the call, you could get this 372, 377, which has a break even. And again, this is going to be 12/31 to 1/4. You have a break even that's all the way up to 382-ish. But there's 3 weeks on this thing, so you do have to be aware of that. So you have 3 weeks to move up here. But if it takes any time at all, by the time it gets to 374, 375, 376, you're going to be looking at a profit. If it zooms up there tomorrow, you're going to be sitting on a loss, and you're just going to have to sit on it. But it's a lot less margin requirement because you only have to buy 2 margin hedges. And it's a lot less risk because you're only net short 1 as opposed to being net short 4, which is the way it is with the 5-1 ratio. And so you can get this right now for 25 cents. However, if you take a look at the spreads, let's go to the 370. Here's the 370, 375s. Here's the 371s, 376s. So these are 5 points apart. That's how you do the 2-1. With some of these, you can actually go a little bit further out on the strike and still bring in a credit, but you're getting close. All right, so here's the 372, 377. So that's now down to 20-cent credit. And let me see here. 1 second. I just need to change one thing. All right. So that's going for about a 20-cent credit. However, if the market moves up, and we're trading at around it looks like 366.20 right now. So the market is actually down. That's why this is down. So we're trading just above 366 right now. If you take a look at this one, let's go 368, 373. So this would be about 2 points, 2 points out of the money. As it is right now, and it's going for about 71 cents. So what I would do is, if I wanted to get involved in the option insanity, as kind of a first time, as long as you understand what the risks are, you understand how this works, I would probably wait for this spread right here, the 372, 377. To go to about 75 cents. So I would put this spread in at a 75-cent credit. And of course, if you need to do the margin hedge, you would need to go out and do the margin hedge. And unfortunately, with the 1.4s, you're going to have to go out a little bit further because they're pretty expensive. As a matter of fact, if I'm going to pull one up just to take a look at it here. The 1.4s are at yes, I'm gonna have to go all options. You're not seeing what I'm doing because if I start moving these windows around all over the place, then I get lost again, and that's no good for anybody. All right, so let's see. 1.4s. The margin hedge would have to be probably about a 405. And you might, at that point, you might get it for 3 cents, probably more likely 4 cents. So you'd have to do 2 of them. So I would put, if you got to do the margin hedges, all at the same time, that I would put those in there. And you're still looking at about $6,000 just to do this one single trade. But you have a very, very high probability of success at that point. You bring in a 70-cent credit. If you think about it this way, most of the time you're going to bring in between the credit and something less than the max gain, obviously. And if you take a look at this, the max gain here, let's see, if you do this is a credit of 88 cents. If you do a credit of 75 cents, you're looking at a max gain of about $200. And so your profit potential on average is going to be between 75 and, if you bring in a credit of 75 cents, between 75 and 100 and a quarter, 150. All right, that's going to be where you land at most of the time. Eventually, you will see the market. If you do it this close, you will see the market move up. But that's why I said I'd wait for the 372, 377s, and then I would do those for a 75-cent credit. So right now you can do those for about a 25-cent credit. And that puts the profit bubble way up here at about 377, 378. So it's way up there. The break even is way up there. But if you can bring in 70, 75 cents on this same one, then you're talking about, a little bit more profit potential on there. So I would definitely look at potentially doing that if it's something that you wanted to venture into, but I would do it at a safer price and put this order in at like a 70 to 75 cent credit. Okay. And the market's going to have to move up in order for that to happen as well. All right. So let's take a look at something else. I'm going to take a look at a crazy calendar that is using the 1223, 1224. Okay, so here's that. Here's the crazy calendar. You'll recall the calendars were going for like 5 or 6 cents. And as you can see here, what I've done here is I've created a very small debit because you can get a very small diagonal spread, because you can get that diagonal spread and bring in a little bit of credit because there's only one day between the longs and the shorts. And so this is a preview, okay, a preview of what the one-day options are going to provide. And those are coming. I don't know when they're coming, so there will be Tuesday expiration and there will be Thursday expiration on a normal basis eventually in SPY. It may be a couple of years from now before they introduce that. I really don't know what the plan is for that, but it is coming. And at that point, you have a whole nother game, because you've got a whole nother element towards the cash flow approach, where you could literally buy a Monday, sell a Tuesday, sell a Wednesday, sell a Thursday, sell a Friday. That type of scenario. You also have much cheaper, or much more efficient diagonal spreads, but you're going to have a lower profit potential. All right, so this is one that you could actually put on for about a 2-cent credit if you could get 6 cents on the 373 calendars. Okay, and then the diagonals of 371, 373. So, and there are a couple of different ways you could do that. I've thrown the volatility here way down because there is, this is a preview. It is not a perfect scenario. And the reason is because Thursday is going to be a short day. And so the Thursday calls at the close on Wednesday are not going to be worth a whole heck of a lot, even at the monies. Be lucky if they're worth 50 cents at the money. Now we can take a look at the money calls right now that expire tomorrow, and you'll see that they're much more expensive. In fact, let's see, where are we at? 360. So the 366 is, let's say 367. That'll probably give us a better preview of it. So 367s right now, with the market trading at 366.20, 366.30. The 367s are going for $1.03 that expire tomorrow. That would be incredibly valuable, if that's what it was on 1223, the 1224. If the market's trading at 373 on the close of 1223, if the 1224s are going for $1, that would be just absolutely mind-blowingly great. I'm expecting closer to 50, 60, maybe 70 cents, but if the market is moving up, more likely lower. So yeah, they're 5 cents, they're 6 cents calendars. If you can get filled on the 5 to 6 cents, personally, I'm going in here and I'm trying to get as many risk-free calendars as I can on this. And the credit on the 371, 373, that's 2 points. You can actually get those for about 50 cents, 56 cents, 55 cents, somewhere around there. And so when the calendars are only trading at 5 cents, you can get 10. And that way, if the market does move up, you do have a legit profit zone. And because the diagonal is so small, you're talking about a much smaller risk. If the market just skyrockets past all of this, you're talking about a $200 risk here because of that. So yeah, the same concept still exists, just on a smaller level. And again, no risk if the market moves down. These calendars, why am I doing 10 calendars? Well, because that's almost what you're going to need to do, because they're just not going to be worth a whole lot. If I can pull, if I can pull a 5 cent profit out of these calendars, 5, 6, 7 cents out of these calendars, at 371 or 372, I can probably pull maybe $75 to $100 out of this trade. I don't think we're going to see 500. This is projecting. This is projecting the calendars. So if there's 10 of them, you can see the 373s. That's leg 4. Would be losing 988 a piece is what it's projecting. Divide that by 10. That's 98 cents a piece. That means that the 156s would be projecting at 58 cents. So that's probably pretty accurate, but that goes away very, very quickly. This is 1 point away from those calendars. The 374, you're back down to like a $50, $60 profit total. That's 1 point past the calendars. At 372, you're looking at maybe 100, 100 and a quarter. That's 1 point below. So that's a very small profit zone here, and that's part of the issue with stuff like that. Okay. Oh goodness, we're not going to get anywhere close to covering everything that I wanted to cover. Let's take a look at one last thing that somebody mentioned in the last trade. Okay, and that is in the last call, and that is the W or the M. You have W trades for option insanity, and you have M trades for diagonals. And here is the M trade for 1223, 1224. Again, a preview of what is to come eventually when they get into one day or everyday option expirations. So this right here, you can get at a 4-cent credit. Okay. The problem is what? What's the problem? The problem is this dead zone. That's the problem. The other problem is that you're not going to make $75 on this trade. Okay, not going to happen. You can get a 4-cent credit. There's no risk to the upside. There's no risk to the downside. The problem is right here. And so if I were to come in here, because that's exactly what's going to happen. If I come in here and I drop this volatility, that's what the M trade looks like. So that, to me, that is a trap. It's a trap waiting to happen. Could this be? So this is projecting at, since I dropped the volatility, it's projecting those longs to be, let's see, 863 would be the total loss on 2 of them. So that would come to 431, and we paid 485. So that's projecting the 366s at 56 cents. Is it going to be 56 cents? Probably not. You might be looking at maybe 60, 65 cents, somewhere around there. So we can do this and pop it up a little bit to kind of see, but that's still pretty significant dead zone there. That if you hold until the last minute, it would not surprise me at all if that's what happened. And in fact, I would be looking to do the opposite with the option insanity, with a with a trade where obviously I'm doing something at a debit, not a credit. It would be a credit if I reverse this whole thing. So if I go buy, and sell, and I know some of you were looking at this, that's why I wanted to address it. It's a trap. So that's what that would look like. If I could get this same trade, let's say for just a little bit more, 16-cent credit. If I can get this trade for a 16-cent credit, now all of a sudden I have a really, really high probability trade in place, because they are going to drop the volatility. I mean, it's just the way it is, right? So here are the prices, though, of that trade. The 373, 377, 375s, that's at a 5-cent credit. If the market, this would put this bubble, just so you'll know, the bubble is right at the longs. Okay, so this is not the option insanity. This is the M trade. And the bubble would be right at 375. It's trading at 3-4-cent credit. Okay, so we let's scroll up here. As you can see, they're all trading at a very similar price. 362, 366s, 364s trading at a small debit of 4 cents. So a couple of things, again, this for me, this would be an option insanity opportunity, not an M trade opportunity. But like I would look to sell the 320 or the 1224, and then buy maybe a 372 or 368, and then do that as a spread, and then buy the second call at a cheaper price is probably the way that I would do it in order to create an overall credit. So let's do this. We'll put this in here, and once we put that in there, then I'll show you what that would look like on Trade Partner. Oh gosh, where did the hour go? All right, whoop, that's not it. Hang on. Smart orders, go new, and so we're going to do a, let's put the bubble at around 373. All right, let's do that. So we'll sell the 373s. We're going to look at 1223 and 1224. Let's scoot this over. All right. So we're going to sell, or excuse me, sell the 373s, and then I'm going to buy with that 371. All right. So I will sell 2 and buy 1. That'll give me a 68-cent credit, and that's a pretty good credit for that. And then I'm going to come in here and I'm going to say buy the 375s for 1223. Okay, so I'm going to leg into this thing. So if you look, if I were to do this as is, we're talking about a 4-cent debit ish on here, right? So I will put in here execute order 1 at a credit of 68.68, and then I would say if order 1 is filled, then execute order to at, let's see, if it's at 68, that would be 0. At 60, that would be an 8-cent credit on the trade. And it's really a matter of, how much of a probability do you want that to get filled? So I'm going to put in here. So now we're trading at 73, 75. If we move up, let's just go 70. Let's do this. We're going to go 75, and this will give us a higher probability, and this one will be a GTC. Okay, so I've got that one. So I've just created an option insanity W trade, if you will. Only I'm getting it at a little bit better price in order to create the profit zone at about the 373 level. All right, so I'll go ahead and turn that one on, and then we can I will take questions. All right. So that one will get filled if the market comes up a bit. Okay. So option insanity, a lot of option insanity stuff available. And we're going to go ahead and take questions. All right, if I'm at the first profit peak in the profit zone on a trade that expires tomorrow, and there's well over $1 yet in extrinsic value, should. Mark, since I don't know exactly what trade you have in place, the question is, I have a $25 profit. There's about $1 of extrinsic value left to go. Would you get out at the first profit peak with a $25 profit? I don't know what the risk is, so I don't know where the market needs to go, but I can tell you that tomorrow is going to be one of the worst days for seeing volatility drop in these longs that you'll see all month up until the one-day type scenarios that we're going to be getting involved in. Second week is always the worst. You have the most volatility drop out of Mondays on Friday during the second week of the month. So I would take that into consideration in making your decision. And also, how far does the market need to move up before it starts reaching your risk zone? If it's way up there, I wouldn't be worried about it. If it's not too far, 2 points away, I'd be worried about it. Has the COVID environment impacted the seasonality of stocks, ETFs? Yeah, to some degree, Carl, absolutely. But I think that's pretty much done with at this point. I think the seasonalities are, I think the things that will affect seasonalities right now are things that would be different than what the trend has been. Otherwise, I think the seasonalities are very, very strong. Very, very strong play at this point. For those of us who can't buy the sell side of the calendar first, could we put the buy side first? What the sell cost would be? Carl, yes, you can do that. So the question is on the risk-free calendars. Let me try and find that file here. Where are you? And let me just here. I'll pull this one up. All right, so you can see I sold the 376s first, right? That's the first one I sold. And the reason that I do that is because if I buy 376s, they're out of the money and I'm risking 75 cents in this example. I'm not willing to do that. And you have to be very, very careful. If you do the buy side first, you have quite a bit of probability that is going right out the door. So I would be very, very careful with that. In fact, I don't do it unless I have something in place that would pay for it. What was the hedge strike? I put the hedge at 420 and the margin crumbs. If you put the margin hedge at 420, and let's say you have let's say a 375 strike, you're talking about $4,500 per, and so that would be 5. Your margin should not be 180,000. You're talking about 420, 375. You're talking about 22,000. So I wouldn't put my margin hedge at 420. First of all, second of all, it's not 180,000. If it is, you need to call your broker. All right, could you look in your crystal ball and give us an idea of what to expect over the next few months to a year, considering all the job losses, vaccine, new administration? Yeah, I expect that we're going to see more volatility than you normally would see. A lot is going to be riding on what happens in this Georgia thing. A lot is going to be riding on what these lawsuits are going on. If the Democrats have their way with everything, you can expect a significant slowdown in the economy. If there's resistance, if the government is divided, I think that we will see a continued move to the bull side. So, unfortunately, a lot of it has to do with how this political junk is going to shake out. So, and of course, there's always that one world event that no one can predict, that can always come into play at any given time, causing stocks to crash, at which point you definitely want to make sure you're on these calls, because man, are there some great opportunities when stocks crash. All right, I've heard you speak on reversion to the mean over the months. What do you use for your mean? So I do say that as a concept. I really don't use anything to speak of. I can tell you that I don't do a lot of technical analysis, and there's a reason I don't do a lot of technical analysis, mainly because a lot of it's just bunk. A lot of it is number crunching, forcing the statistics to say what you want, et cetera, et cetera. I know there's guys out there that swear by it. There is some good stuff though, and the congestion patterns are pretty good. I have some good patterns. And so right now, for example, if you take a look at, let me just pull a chart up here, and I'll talk about what I mean. If I can find one. So overview, place trade, SPY. Here's a chart. All right, so here we're trading at the highs, all-time highs. We're trading at the short-time highs. We're trading at the intermediate time highs. Reversion to the mean is down. That's how I play it. I don't play it although 350 would be, if it started moving down, 350 would be an incredible support, and it might stagnate there. Are we done with the up move? Maybe. You got a seasonal coming up, so I think there might be a little bit more room to the up move, and then once that happens, I'm going to be playing the reversion to the mean. I'm going to be playing more to the downside on these, which just simply means I'm going to be looking for bigger credits on my bullish neutral or my bearish neutral trades, right? And so that's what I mean. I don't have any real specifics. If you're short as if you're short as 367, you're going to be close. I don't know what your other short is, but you're going to have to be really careful tomorrow. Could you show again the parameter of the 5-1 trade? This is week, by the way, Mark, is very difficult week because of the pricing, which is why I got out of the main trade that I was in yesterday. Could you show again the parameters of the 5-1 trade that you were taking earlier this week? You betcha. So let's move on up here to that one. That's it. So that's a short the 373s, or excuse me, short the 383s, long the 373. The problem is that you have to go way out there on the margin hedge. So this costs quite a bit of money, quite a bit of margin to put on. But you know, if you consider it, you got to look at it this way. Let's say the margin on this thing to put it on is going to be let's say 15,000. Okay. If you end up making, let's say $300, which is generally my profit target on these, I'm going for $300. If I can get a bigger credit like on this one, I'll go for maybe closer to $400. But if you take a look at that, you know, that's a 2% gain on the money, and I mean that beats most everything out there. So let's see here. Close one short, call from calendar today, creates an air close to risk-free trade. All right, so took your December 21, December 28th times 2 trade. And you exited one of the shorts, so now you have basically a risk-free. Yeah, just got to be careful. Oh, so December 21, December 28th, that's actually pretty good. So this is where that one's at. The one that I said was at 55 cents. I got it filled at 54-cent credit. It's actually trading at a 35-cent credit right now. So making about 20 bucks on this particular trade. And this is the 1.6-111. So come 1.6, if we're trading anywhere up here, I'm going to be looking at exiting the 1.6s and selling the 1.8s. Let's see, on the trade place on 11:30, expire 12, diagonal 367, 372. Those 4 calendars. 367, 372, the 4 calendars. Yeah, it's because we're trading at the lower end of that. So yeah, like I said, this is a tough week on this one. Let me see here. Let me pull this up real quick. And while I'm doing that, all right, 367, 372s, and then the because I'm not in any, I'm out of everything for tomorrow. 372s and 372. So 1 second. Sell. All right. So that right now is at that's at a 55-cent credit. There is I think I originally got into that at want to say a 20-cent credit. So the market's trading at 366.61. The extrinsic value on the 367, it's still $1.12, which is really ridiculous. It really shouldn't be. Yeah. With those 372s, they're worth like 7 cents a piece, and that's the issue, is that you still can't get anything on the calendars. And that 367, is, whoops, that's not true. Hang on. 4, 5. It's trading at a debit of 4. So that absolutely should show a profit right now. All right, let's see. I'm not sure what's going on. Yeah, interactive brokers in and of itself is wonky sometimes. Are you planning another super portfolio rotation webinar? Yep. And we are going to be exiting very soon, a lot of that. Expirations 12/16 to 12/18 are favorable for OI on puts and regular spreads. Uh-oh, my screen just went blank. Hopefully that doesn't mean my computer went blank. And wait for it. It's been doing this every now and again, so I'm assuming I'm assuming I didn't lose anybody while that happened. Nonetheless, the deal with the 12/16, 12/18s is that you have ex-dividend next week, so you got to be careful of that, and it will affect the trades. Other shorts are 371 and 372, and then 372 calendars. Yeah, those calendars aren't going to be worth jack tomorrow. So you got to be careful of that. If the market moves up, obviously then 372 calendars are going to be worth something. But right now, I had nope. Let's see here. I had the calendars up. So let me see if I can find those again. Nope. So right now, just to kind of give you an idea, the calendars are going for the at the money, which is at 367 now, is going for well, it says 75 cents, the 367. So that would probably be a pretty good guesstimate for tomorrow, is that they're going to be worth maybe about $1 if the market moves up a piece. So you have to calculate that into it. Thanks, Juan. Appreciate it. That's more than until I draw the money options will be significant. I have 371 calendars with longs. If the market stays the same, you'll probably see those calendars. If the market's right at 367 tomorrow, you're probably going to see the 370. What'd you say? 371 calendars that are trading right now at. They're trading right now at 35, 50, 14. They're probably not going to be trading much more than what they are right now, to be quite honest on that one. Those are only 4 points out of the money, and they're only going for 35 cents. I mean, that's awful. All right, let's see here. Off-topic question: do you plan on doing All Access Pass webinar before the end of the year? that's a tough one, whether I'll be able to fit that one in before the end of the year. When I mentioned trade placed 11:30 diagonal 4 calendars. I mean, yesterday the market moved to the big profit zone. So part of the issue is the value of these calendars right now. They're just not as good, which is why I say you got to if you're going to get into them right now, don't pay a lot, which is why I was trying to get into the ones for a couple of weeks from now at 22 cents. And it still wasn't getting filled. And so I wasn't gonna, that's when I went around and turned around and put in, where is that? I turned around and put that trade on instead. Because of that, I could have gone to 23 cents and I would have got filled immediately, but I'm so picky about that right now. This month is just going to be that way, and so you got to be careful. All right, let's see here. Any other questions? It looks like I got everything. All right. There will be a call Monday. There will be a call Thursday, and I'm not sure about the following week. I'll be traveling the following week. That would be Christmas week, so I will let y'all know when I know exactly what I'm going to do. All right, everyone, have a wonderful day.